let's start with you, Michael, because obviously it'd be interesting to get your perspectives with your knowledge of what's happening in the UK, just in terms of a response, I suppose, to what's happening with the European Union here with the care strategy. How does that fit together, and are there different areas that you're particularly looking at?
Interesting that you're asking the person representing the country that is no longer in the European Union to respond, for which I wholeheartedly apologise. Anyway, thank you for inviting us here, and I'd like to say that we're very excited to work with the SHHA because I think in the UK we have been quite focused on looking to other English-speaking countries, generally speaking, to the US, Australia, New Zealand, those kind of places that do have very interesting business models, by the way, that I would recommend that you look at, and we might touch on some of those. I think that is partly driven by a cultural affinity, but realistically also by just terrible language skills of English people in general. And I think we're very interested in engaging with this. My personal background is I lived half my life in Germany. So my dad actually lives in Germany at the moment. I'm trying to get him to move to a betreutes Wohnen at the moment. My wife is Italian, so I have an interest there that the Italians get their act in gear and build lots of options that will keep my mother-in-law in Italy. That would be my minor win here for the day. What I would generally say is that how the market's changing, and this is not just a thing in the UK, I'd be interested in what my fellow panelists have to say, but the market for care homes has been shifting significantly over the last 30 years or so. And we see that in the UK, we see that in other countries too, that effectively the average length of stay in care homes in the UK is now down to something like 18 months. And they have moved into the space of dementia care, high-level needs. I think that's something we're seeing everywhere. You know, in Germany, there's not many Altenheim anymore. It's all about Pflegeheim and all those places, and you see that around the world in the trends that we observe. Now, that leaves a big gap, and I think that gap really is the one about the senior housing or the independent living. We call them integrated retirement communities because you're integrating elements of care, but also that lifestyle of keeping people independent. And we think that that's the really big gap in the market. So I'm not saying in any way that we need fewer care homes. In fact, we probably need the same number, but for a growing number of older people, focusing on end-of-life care, high levels of dementia, and really that medicalized institutional care is likely to come from the care homes that will keep shifting on that acuity scale. So I think that's something we're seeing quite a lot of. I think that speaks to the prevention agenda, looking more upstream, looking at how can we empower people. What I would generally say is that I personally don't believe that home care is the panacea and the solution that will solve the problem here, because getting hold of workers is a problem in any country you go to. I was at a conference in Singapore recently, and Asian countries are struggling with workers, and we're trying to recruit the workers from those Asian countries. So it's a worldwide problem. And I think if you look at the inefficiency of having people drive around a large dispersed area, doing 15 minutes of care here, 30 minutes of care there, I don't think that's a very effective use of time. So what I see developing, and that's something, again, we've got that in the UK and other countries too, is the trend of senior living or senior housing campuses effectively becoming hubs for the local community that actually provide a place to live for their residents themselves, but also act as centres of acting aging centres, if you like, to actually enable well-being and independence for the wider population living around them. I think there's interesting trends there, but the real estate component of the longer-term care strategy, super important.
Okay, great. It would be good, Raoul, maybe just to pick up with you. I mean, we're looking here at business, policymakers partnering for a positive future. So, I mean, we can talk a little bit about the challenges, but I'd be keen to talk about, the positive elements of that. You're obviously looking to partner and to drive forward as much improvement as you can and investment as you can. I guess, what could policymakers be doing? What are they doing that are helping you, I suppose? And what areas would you like to see this pushed more forward in?
Thank you, Richard. I think one of the areas where today everybody sees huge challenges is with the workforce. We had Ms. Bachmann explaining also the importance of the quality assurance. So when we speak about quality of care, you can put all kinds of regulations, but the quality assurance will also be key. And I think in that area, especially if we would have a bit more leeway for those that do the quality assurance and also more funding, this would actually help to get more practical views on what is possible in terms of providing care. If there are, say, 3 nurses required at night, and not all of them are meeting those requirements, do we put an immediate patient ban and basically keep beds empty because now there is not enough nurses with the right qualifications? Or can actually that quality assurance body control to see, okay, but in this specific care home they have that all arranged, and we can actually continue and not have already this immediate ban. I mean, this is also one of the discussions that we're seeing today in Germany. In many European countries, basically, there are beds, there are residents waiting to get into the facilities, but we don't have the right care workers at the right place, and we have a very strict regulation that then basically blocks the whole process. So I think there, I'm not saying we need to relax the rules, but if we at least could give those bodies that actually do the quality control more power to be practical about these things, I think that could be a huge help.
So that, in a sense, is, if you like, balancing some of the risks, which is it better for somebody to be in that facility than to be living on their own at home without any care at all during the night? Or they're being, okay, that's an interesting point about where there can maybe, where flexibility may well play a role going forward. Candice, it would be good to pick up on, I mean, there was a lot of mention there about the sort of move over from more institutionalized care into community-based care, and I think that crosses over a little with what Michael was talking about as well, in a sense. What's your take on that? How do you see that developing both in the UK where you are, but also, obviously, you're looking across Europe as well in different markets?
Yes, thanks, Richard. And just to pick up on what Raoul was just saying, I think in the UK we have a slightly more developed regulatory system than some places in Europe at the moment. And I think we have seen the Care Quality Commission working there to accept that perhaps there isn't a matron of a home, or the old-fashioned word matron, senior nurse manager, but there is one in a nearby home that's 15 minutes away, and that's sufficient on an interim basis until staffing can be improved. And I think that's a very good example of regulators working with the care industry to deal with difficult situations. But just coming back to your question, Richard, on across Europe, I think the public-private partnerships that we're seeing in the UK is also a very interesting development, and it applies across all aspects of the care industry. We at CMS do hospitals, primary care and secondary care as well. And I think some of the most developed public-private partnerships started in the hospital market, often with some negative headlines, but we've learned from what was going on 20 years ago, and the most successful I've seen recently is Guy's and Tommy's and the Cancer Care Centre, one of London's leading hospitals, built a new cancer care centre in a joint venture with HCA, and HCA, the US private operation, the US REIT, run the top 3 floors as private cancer treatment, and the bottom 4 floors is public cancer treatment, but sharing radiography, sharing phlebotomy, a lot of shared services, and it works very well. And we've seen that in care homes as well, care home operators accepting more public pay patients rather than previously they were more focused on private pay. And that's partly as a result of what happened in COVID. And I think the operators that have adapted the best are the ones that were willing to accept public and private, provided that local authorities and regulatory authorities have been fair in and recognise the costs of care. And so developing that onto the retirement living sector, senior living that Michael was talking about, again, I think we're seeing, as he mentioned, interesting public-private partnerships between local communities, secondary schools, primary schools, and care. And it's an integral part of every community.
Okay, good. I'm going to come to you in a minute, Ed. But Martin, I just wanted to pick up with you, I guess. What's your perspective there? You're also, based out of Hungary, so you've got a sense of what's happening there. It'd be good to get your perspective, I guess, coming from a different region.
How many minutes do I have to answer this question?
We'll be doing a dedicated special one-day conference on the Hungarian one in a minute, but
Thank you.
Not the whole session, Martin. Yeah.
Thank you, Richard. Actually, to answer to your question, that I'm not working only in Hungary, so that a little bit regionally, I think if we focus a little bit on Poland, Baltics, a little bit south like Turkey, or even to the States, we will see what is a little bit the future and what is the flow, what is triggering, what is not. In Poland, we do a lot of researches. At the universities, we have several focus groups, so that we have a first-hand experience really from the field. Right now, just 2 weeks ago, I returned from the States, and I saw so many fantastic things. What really we not use, or we are not willing to use that, and I don't understand why. This is, for example, the AI. For example, let's make two approaches. I think one approach from the like a real estate developer side, and the other one is the operator side. From the real estate developer side, what I experienced and what I see, it was a very new technology, is like monitored care homes. And this is absolutely fantastic idea, because AI can replace a lot of human work. It can be monitored easily, and it's cost effective. We don't know this is sustainable, and it's long proof. But anyway, we have to focus on this solution, and that was one solution. What we heard this morning from the European Commission side, I think from the operator side we have to learn again. We just heard that what we have to fulfill again what home means, because after COVID-19. Elderly people, they don't look like for the long-term care as a home, and this, I think we really need this type of summit. And thank you again for inviting me, just to start a dialogue, and fulfill. This is my message, just to fulfill a long-term with homes, the new meaning with the homes. Thank you.
Okay, good. And let's with you just look at some of the, you're looking at the figures obviously there at BNP Paribas, but I mean, the life expectancy has increased significantly. Those kinds of things. We've obviously got the demographic of the post-war boom. We'll be reaching 80. So huge number of things happening. I guess, what are some of the sort of scale of the challenge ahead, and what are we looking at? And feel free to pick up on any of the points you've heard as well.
Sure. Thanks very much. I think essentially the core issue here is that in pretty much every European territory, we're looking at a shortage of appropriate accommodation to satisfy the need, whatever numerically that is in any given country. And it's clear that need is going to increase. And I think ultimately it's less about how much than how we can deliver to keep up with imminent trends, rather than the long-term position in 30 years' time. I think that's probably looking too far ahead. And the question around delivery really is, we've clearly got an existing stock of elderly care facilities. It's a patchwork. It's fragmented. The stock was developed over the course of probably 40 years on average, with differing regulations which are not standard between countries, let alone kind of regionally. And we have a development situation which clearly differs from country to country, and there are different incentives to care home operators and investors in the real estate to engage in different territories. Now, I think there are a few aspects to this. The first is around regulations, and we've touched on this in a number of different angles, but fundamentally, the fragmentation of regulations across different European territories is unhelpful. And I think rather than seeing a sort of a tendency towards a common goal, if anything, we're seeing further fragmentation. And examples of that might be the devolution of effectively regulation setting within the care sector in Germany to the federal states rather than the national government. We see a similar trend in Scotland at the moment. That affects aspects of operational care provision, but also the physical characteristics of the homes in which it's provided. And clearly, from an investor's perspective, it's problematic to look at a landscape where those requirements might change going forward, and there's a history of kind of retrospectively imposing new restrictions, whether it be in terms of bed numbers, fire safety regulations, etc., albeit clearly some of those are required. So I think there's a question broadly around how one handles that general situation in a way that minimises risk and also ensures an appropriate balance between the ability to provide good care. And I think kind of related to that, there are a couple of trends that have been evident in the European market generally over the last few years, and I think this relates probably more to care provision and the operator side than it does to real estate, but it relates to both. And the first of those is a tendency towards an internationalization and cross-border proliferation of individual operators. In the acute sector, that's tended to be driven from Germany. In the elderly care sector, it's been driven from France largely. And certainly, I think the recent situation concerning Orpea in particular is really, really unhelpful to this general trend of consolidation across the sector, where you could actually hope to see some sort of standardization of provision and effectively a formation of a common language that assists the kinds of objectives that we've heard from the Commission earlier. The second aspect is cross-border investment by real estate investors in particular. Now, I think that also is a significantly beneficial trend in terms of interpreting regulations, in terms of presumably providing an impetus to harmonise regulations, and also providing a framework for reacting to that, because that's clearly key to providing the accommodation and ultimately the beds that we're going to need to deal with this problem going forward.
Okay, good. And Raoul, I could see you agreeing with that, because obviously you are looking cross-border. So I guess, what do you need to be able to really advance? Because obviously your aim is to build at speed. We do have this demographic time bomb coming up in a way, and ideally we should be looking to build at the moment and be planning for that. But obviously there are challenges, I guess, as an investor from the interest rates at the moment, higher pricing in terms of building contractors that we've seen, over the last kind of 12, 18 months. So I guess, what's on your wish list? What are your challenges? And I guess, how are you looking to deal with that at the moment?
Well, I guess as a wish list, what we just heard, you would hope indeed for a bit more aligned regulation throughout the different territories. The way that we deal with it is just to define our own standards or have our own point of view to say, okay, what does it take to future-proof a care home in almost any territory? And at least when we would develop a new one in a specific country, that typically means going beyond that regulation just to make sure that that care home that you're building, at least for the next 30 years to come, is still going to be compliant with all the care regulation that you may see coming. Because you could see it coming, for example, with COVID, that ventilation would become more important, compartments would become more important. And the same thing with, for example, the energy standards. We still see in many countries that energy standards have a huge catch-up to do. And if I would now build just at a compliant level in the UK, for example, that's not going to last very long. That's going to be 3 to 5 years, and then there will be a whole new set of regulations. So building just to that level makes little sense at the moment. So one would hope, of course, that there is this more aligned perspective from the different regulators. Unfortunately, that's not the case. But then it helps if a company like ours, you're active in many different countries, and you could see okay, I'm taking some best practices from Sweden if it comes to energy standards, or I'm going to look at best practices with some of the larger international operators on how they look at quality of care provisions and what we need to be doing to have a building that's going to be a bit more future-proof, and it's also going to be useful throughout that whole cycle. The current cycle with the interest rates, will that last? We assume it will not be that long-lived. Definitely in the medium term, this sector has all the demographic trends working for it. So we just need to make sure that we are in a good position to also benefit from the opportunities that will come.
And does that help you as a listed entity that you've got a slightly longer term view in it, I suppose, than a fund? How do you see that?
Well, I'm not sure it helps as much. If you're listed, there's still always the risk of the short-term view and short-term demands of the stock market, presentations of quarterly results. So there has to be some sort of balance in that, but definitely just being in real estate, working in a sector where 25-year leases are quite common, you need to have a quite long-term view, otherwise it doesn't work. Yeah.
Okay, good. Michael, it'd be interesting just to touch on the regulatory side. You know, I mean, is less regulation good? Is more regulation good? How do we find the balance for that, particularly when we're looking at the sort of, you know, public-private one? And anybody else can have a view on that, but let's start with you, Michael.
I think generally speaking, the fact that you have care regulation has been a good thing over the last 30 years, because I think some of the conditions we have seen, you know, 20, 30 years ago would not be acceptable today. And I think we should all recognize that it was a good thing that regulation actually has driven up standards to a degree, which in many cases, in the vast majority of cases, I would say these days, there's a good standard of care. There is the problem, I think, around the line of the duty of care, and anything above that, the operator's to blame for absolutely everything that goes wrong. And I think that has gone a bit too far if you're talking about the care home sector. And I don't mean that in the way that we need to drop standards, because we need to be very vigilant, but there is only so much you can do. And I think the upward drift of care homes over the last 30 years has largely been driven by a regulatory cranking up of the pressure. And that means from a workforce point of view and all sorts of other things, it's difficult. One point on the cross-European aspect of this, a little anecdote. I read something recently that the language skills of European countries, one way you can measure them is whether the TV shows were subtitled or not. Because the only kind of countries in Europe where you had, Robert De Niro, for me growing up, had a German husky voice, and I think Al Pacino had the same one. So when they were in the same film, it actually got a bit difficult, to tell them apart. Anyway, what I mean by that is that effectively the dubbing of films was done only if the market was large enough to actually sustain it, to make the effort to kind of transform something to that legislation. I think something similar might happen here, is that, if a large company, it's just not worth actually trying to get your head around the really complex regulatory environment, all the kind of benefit systems, if it's for a very small market that you're then trying to serve. So, there might be people here from I'm going to pick out Slovenia, which I think is a lovely country, but, what kind of market share can you expect to get there, and how many homes can you build? And I think we might get to a two-tier market where everyone wants to build in places like Germany, France, maybe Italy, but the smaller ones might lose out. I think that's a problem that is I don't know if that's concerning or not, but it's a point to bear in mind. Different point, though, when it comes to senior living. And I think on that particular aspect, I would say currently that is somewhat under-regulated, certainly in the UK. And the reason why I say that is that some of the business models which are not rental but deferred payments, long-term fee structures, and we've got colleagues here from Octopus Real Estate, who are the biggest investor in that in the UK. I don't know if they can stick their hands up if you want to talk about DMF models. Colleagues sitting over there, very interesting, coming from New Zealand here. The problem there is that there's not enough long-term certainty for investors, and actually that leads to short-term investment horizons. And actually we want more regulation of that to create a more stable platform and ultimately bring yields down in that sector. So I'd say care homes probably over-regulated at this point in time. Senior living in many cases, bit of catching up to do.
Okay, good. And if anybody else has got any, don't wait for me to ask you, just come in. We'll set a rule on that. So you're about to do that exact thing, Ed. Good for you.
I mean, I think the one comment I would have there is, I mean, clearly there's a sort of performance-related regulation, isn't it, ultimately, in any environment. You know, the care standards have to be to a minimum standard. I think that's a non-negotiable. I think the sort of rather more interesting perspective from a real estate standpoint is regulations around the physical asset. And I'm going to be controversial here and say, actually, I don't think that's entirely the crux of this. And you know, kind of proof of that is in the pudding, really, is that you can have any number of old converted homes that are run perfectly happily, targeting a certain market, a certain price point. By contrast, what's absolutely clear is that the driver behind supply of new stock is largely the private pay market. And certainly that's the case in the UK, where, you know, essentially from a pricing perspective, the buyer market is totally fragmented, because essentially it is an individual bargaining with a care home provider, with no collective bargaining either by a pension insurance company or any form of collective body other than local authorities, which, you know, clearly are not the target audience, the majority of new stock. But nonetheless, development is happening. And old stock is, to some extent, being regenerated. You know, the situation is not the same in Germany, for example, where there is a notable shortfall in development, you know, where regulation arguably is robust, where there's a clear structure around fee payments that should notionally provide security to the operator and to the real estate investor, but actually fails to do so because rents, in my opinion, are structured the wrong way. So I think there are various aspects around this that are subtle, you know, expose subtleties in different markets, but ultimately, you know, there's an element of the kind of financial treatment of regulation as opposed to simply, you know, the quality of care regulation that's key to actually moving this forward.
Yeah, go ahead. Yeah.
Very interesting. You mentioned, Michael, Slovenia, and I would like to reflect on the other side of the coin. What is a CE or the emerging markets? Right now, when we want to define the market, it's very hard to define. I just had various conversations with lots of investors, and they want to know. I mean, on the emerging markets, there are definitions by words, but there is no content behind it. So the problem is that we just expect, you know, from investors from the major market just to deliver their best practices and just to help, you know, for the stakeholder just to understand even the long-term industry. Just one insight, when we are talking about CEE, again, we can talk about like a market like more than 100 million people, I mean total, but that means at least 15 different languages as well, 15 different regulations. Thank you.
Okay, good. I'm going to come for questions in a minute, so I'm just going to ask Candice a question, and then I'm going to ask you if you've got any questions. So think of them now, and I'll be back in a second. Candice, I just wanted to pick up, you mentioned something about some of the changes in terms of the funding models. And maybe let's drill down a little into that, because obviously before in the UK, there was, you know, a real separation between private healthcare and the national health funded models. But you're seeing that develop and change at the moment.
Yes, and in contrast to what Ed just said, we have been seeing operators who have survived COVID better, because earlier they had accepted more public pay rather than private pay. And we're also seeing local operators negotiating well with local authorities who are becoming more realistic about the costs of care in some areas.
And does that, if we look at healthcare, for example, is that the relatively straightforward, this is a GP, you know, a doctor's appointment, or is that moving beyond that?
No, I think it's moving beyond that to local authority providing funding care at more realistic, being more aware of the cost of care.
Okay, good. Does anybody have any questions, any points that they want to bring? Yeah, go ahead.
It's good exercise for me, Sylvia. Exactly. Yeah, my name is Klaus Niederländer from EcoCare. Michael and Candice, you both talked about, the current system is just not functioning anymore, and you cannot switch, from institutional care to home care. Actually, home care is already happening on a large scale. All the informal carers are doing that already in our countries for a very long time, totally discounted. Nobody puts a price on that. So, and you're talking about new partnerships, public-private partnerships. We understand we need to move out of a system, and there are some examples. The real question is, our institutional capital is faltering, so we need to build a new institutional capital of the future, a new infrastructure, which is not just bricks and mortar, but also new social infrastructure. So how do you link, you're coming from a sector which is very much about bricks and mortar, but actually switching towards much more, it's about people in the end. So how do we build this new institutional capital, which you write? Because it's nice to have a few public partnerships and a few lucky ones, but we talk about here about a country, a continent. How do we need to move forward to actually build this new institutional capital?
Will I kick off with that one? I think we've seen pension funds, long-term capital investing in care, whether that's care homes or senior living, and that's been very successful. Octopus, as Richard mentioned earlier, might want to comment over the coffee break on their recent investments. And I would encourage funders. It's a long-term asset class. The figures are all in the right way in terms of aging, and it's important for ESG, which all pension funds across Europe now are very aware of and needing to align with, and investors are requiring it.
Great. Did anybody else want to pick that up?
Just a slight add on to that. I think there was talk earlier about what can governments do in terms of direct funding of this, which we heard. I think there's a big piece here around what can governments do not to provide the funding itself, but how can they provide the regulatory framework, the framework to channel effectively long-term institutional capital into the markets. And I think a big question there is really the risk-reward distribution. And I think, again, we come to the regulatory point. If we keep on making this high risk, and someone once said to me, if you provide services for vulnerable people, you make yourself vulnerable as well. I think that's the problem, that if we keep on doing that, then the cheap money will stay away. And I think there's something here where how can the government actually de-risk certainly parts of that investment journey? And I think that's how you get the long-term money, and that's how you get lots of it. And it's not quite there, the balance, I think.
Okay, interesting. Any responses to that, or any other questions, any thoughts? Yeah.
So I think Michael was touching on a very good point. You were speaking earlier about how lucrative this market is in America and how unlucrative it is in Europe. And I think a big part of it is because we're looking at this segment quite a lot, is the regulatory part, which is a bit too complex. And it's really not very open to investors. And you can see that, with all the stats you describe. And I think that's where a big problem is that it's very complicated to enter this market for an investor. There's a big problem with that, I find.
It will be interesting, I think, if anybody's got any views on those from the panel as well, just to pick up on that, the complicated side of it, how difficult that is, and how that's maybe perceived by institutional investors. Maybe Ed, if you pick up on that.
I think it's slightly obliquely. I think what I would point out is, actually, yes, clearly there has been significant interest from institutional investors, who, not all of whom are necessarily focused or expert in investment in this specific sector or group of sectors. I think clearly it's extremely helpful that there are now an increasing number, Adifika and Kofinimo clearly in the room here, which bring expertise to the sector and actually help in terms of setting expectations, and also the standards around which investments are priced, expectations around sustainable provisions within leases and so on, because actually the latter point really is kind of the cornerstone of sustainable long-term real estate investment in the sector. Everyone's heard the word Southern Cross 100 times, but essentially the biggest care home operator in the UK fell at pretty much the first hurdle in 2011 because the rents were set too high against predictions of operational profit. In Germany, we're seeing a quite widespread wave of insolvencies in the care sector. Clearly, that's not all rent-related. There are other factors that affect all care operators, but these aren't unforeseeable. The scale of inflation is perhaps wasn't foreseeable 4 years ago, but inflation happens. There's been a staff shortage in the sector around Europe for the last 10 years. There's nothing new. But fundamentally, setting rent to a component of revenue rather than an underlying profit line is problematic. And I think generally there's an understanding across most of the territories now as a result of informed investors, and arguably steps forward in the side of the advisory community as well, that are beginning to address that. But that needs to be kept at the forefront of I think everyone's mind if they're going to be directing capital at this opportunity.
Okay, great. Yeah, go ahead, Ron.
I think also the governments in the end will come to that realization, yes, that care will be still a very significant part of GDP. And if you want to keep that in some way under control, probably considering all the staff shortages, having people living until a very old age at home is not going to be the solution. We've heard, Michael, of all the inefficiencies that brings. There are other tailwinds to that as well. We haven't spoken about it that much today, but having old people in their 90s living at home, in the end, they will end up in social isolation, where if they would be in a care campus, they would actually be among their friends, potentially. Yeah? So that would be a big driver. A different conference than this one today could speak about the whole housing crisis in Europe. But if you have people that living well into their 90s in a house that was built for their whole family with 4 bedrooms, that's also an issue right there that you could tackle. But it will require indeed also to have a product in the market that is attractive for those seniors. And then I think we will see that shift. And then, as Candace said, there will be institutional money to fund that. Yeah.
Yeah, it's interesting. I'll come to you in a sec, but I was at Pravada and also with Judith, who will be speaking later. But, one of the key things that came through there was just, the requirement to have 1 million houses, but 300,000 of those are senior living. So a huge task, and that's just the Netherlands. If we think then across Europe, what that means. So sorry, Michael.
Entirely agree with that housing point, by the way. I think that's a hugely important one. One point I would say, though, on the investment and how to enter the market, because I very much agree that it's difficult. What I would say, though, and this is a challenge, I think, to some of the investors that we see, certainly in the UK, is that I think there is sometimes a tendency of investors trying to make the customer proposition fit their capital structure. And what I mean by that is that there's not lots, but there's quite a lot of people who come to us and say, why can't someone in their 70s just rent a house rather than buy it? And the answer to that is that the longevity risk of a rental model is entirely with the older person, and they might actually run out of money if they live for more than 20 years. And that's why models that we see from New Zealand or in Australia, where you get a certain percentage of your investment back, so a certain cap, that's actually a customer-centric model that works very well. But we still get people saying, yeah, but actually my money would be much better if they just rented. And it's a bit like, yeah, but that's your problem. And I think you need to think more creatively about understanding what the customer actually wants. So that's a bit of a challenge that I think some people kind of, they're a bit disappointed when customers don't actually correspond to their spreadsheets. And I think that's something to bear in mind.
And that is interesting because that's also something that we're seeing across different real estate asset classes as well, is that focus much more on what actually goes on in the building, what that building is required for, and how we service that need rather than just thinking about them purely as a financial asset. And that's specifically the case, I think, particularly when we're looking at senior living and healthcare with the impact element. And I think that's absolutely, the point you made, Raoul, was very interesting, is that in research that I was looking at a couple of weeks ago, one of the key challenges, and this was for broader residential as well, one of the key challenges was loneliness. That was what came up, was because people were living on their own and were separated, and loneliness was their number one issue. And that was something that they wanted to deal with. So very interesting points there. I wanted to pick up just for the kind of last 5 minutes on, I guess, kind of best practice. lessons learned, what we may be able to share. So it might be interesting just to pick up on some of those elements, because it's not often that everybody is in a room together. And I'm sure there's things that we can share at the coffee break. But it might be interesting just to pick up individually on some of the best practices that you've seen, some of the things that you think are interesting to share. And we can start anywhere, really, with anybody. Who's got one? Silence, you see, that's... Martin, okay, let's start with you.
You know that I believe in science and technology. So again, that I think the flagship solving this problem will be shifted towards the technology. And we heard a very good example from mixed-use buildings. So definitely, it's also one way just to go ahead. And if you ask me the question is that how can the regulatory platform follow up those issues in time? So this is also a question.
Okay, good.
Yeah, I can agree with that. I was not going to call it mixed use, but especially care campuses would be a type of real estate where people could already see a senior living environment, but then if they would reach a really high degree of care, they wouldn't actually have to leave the campus. They may have to go into a different building, but they might still be in that same setting that they've then been living for maybe well over 15 years. Or maybe a bit going into Martin's direction in our properties in Finland, we do have these cross-generation facilities, meaning that the care home has a ground floor where there's also a daycare or a school, where people would basically see their grandchildren when they go to their school or to their daycare. Yeah.
Good. Any other? I mean, that's an interesting point as well, because very much that idea of bringing generations together, and especially, and we'll pick up on some of this in some of the later ones around impact, but different research coming from different places. So looking at Japan, where there's much more of a focus on well-being and longevity, rather than you retire at a certain age, then you do this, then you do this. That sort of compartmentalized view that we have here, in a way, is that that's viewed very differently, and that's about just how you have a longer, happier life. And if it's working until you're 106, then it's working till you're 106, whatever it might be. Good. Candice, you'd got...
I was going to pick up only on Michael's comment about building products that people want to move to. And that's both products to buy and also products to rent. And I think we are seeing the start of a rental product, certainly in the UK, by some of the operators looking to provide more flexible arrangements. I think the pricing is quite expensive if you don't, say for instance, you have a couple, one of whom does need care, the other less doesn't. The model is still expensive. So I think there's pricing discussions around that, but it's good to see a rental offering.
Okay, good.
Yeah, I mean, I think I'd add to that. I mean, I think there are obstacles, particularly in the UK situation, around proliferation of rental model. There are fiscal obstacles for a start. And also, clearly, the culture of home ownership and a cultural format of ever-increasing property prices implies somehow that there's rightly or wrongly, that there's some form of opportunity cost associated with selling and moving to rental product. But I think really what's striking in the British situation, as opposed to certainly the Western European situation, France in particular, where operators such as Domitis have produced a sort of, to my mind, an appropriately rent-targeted approach, where the rent for a given unit is broadly comparable with that for a similar or marginally larger open market flat in a given location. That clearly hasn't happened in the UK, and as Candice has said, the rental levels for existing rental model product is significantly in excess of ambient rates in any given local market. Partly that's because of the additional cost of developing retirement products in terms of requirements for additional space. Typically the units have to be somewhat larger to accommodate wheelchair movements and so on, in a climate where typical unit size generally in the UK is significantly smaller than it is in certain European countries. Is there an answer to that? One would assume that there is. And I think we need to move to a situation, ideally, where the rental model is not viewed as a cheaper alternative to long-term care, because there are two of you that need to be accommodated, but actually is a genuinely viable and cost-effective solution that, you know, whereby the rent can be paid for out of your pension, rather than having to make, you know, specific calculations around how long your equity will last.
Okay, good. And Michael?
Final point about rental, I think the problem in the UK, it's got to get cheaper, but the problem that we fundamentally have is that the UK has one of the lowest pension replacement rates in Europe and the highest asset prices. And if you put those two things together, quite tricky. My dad's got a stonking pension in Germany, so for him, he can just go and rent, and I think we just need to bear that in mind. The final thing I was going to say, in terms of why I think this is exciting, or something that does excite me, is that I think we need to remember that if you look at the future use of technology and robotics, and this is a bit of a tangent, I think this sector has a huge advantage to actually be at the cutting edge of the care revolution and the technology that's invested, for three reasons. Number one, it's really expensive to actually fit out any apartment or any kind of flat with technology. You can do that on a sustainable long-term basis in a retirement community. So that's one thing why you can invest them at scale. The second thing is you have human backup on site in case it fails. So again, as a test bed, we've got lots of companies or professors who are now saying, actually, you should be leading the new revolution of robotics in the care sector. Then you also have a population of adults who can still interact with that technology because they don't have advanced levels of dementia yet. And finally, there is a stigma around robots providing care to our aging population, but it will come. And I saw a humanoid dementia robot in Singapore that looked a bit, it looked a bit like a sex doll that, talked to, that was doing things to. It was very, very odd. Okay, I'm not saying that we should promote this in the UK, but or in Europe, in fact. But I think the issue really is that we will see a revolution in robotics, and I think if there's any sector that can install them at scale, provide human backup, and have that human interaction that people need, so that you're not dehumanizing the care experience, it is this particular sector. And I think that will be an increasing conversation for all of us over the coming years. So I'm very much looking forward to that.